All right, what's going on, everybody? Welcome to episode 2 of the um, little course I'm putting together on my trading strategy. In the last video, I went over the entire kind of chart setup and a little bit about myself, a little bit about just how I set up my workflow when it comes to trading stocks. In this video, I'm going to be going over the actual trading strategy, kind of the concept behind it, and what it looks like in real time. And I'll touch on kind of every point within the strategy, kind of what on some of the next videos I'll go more in depth on, but I'll touch on everything in this video. Um, Hopefully this video doesn't get too long, but let's just jump right into it, all right? So the trading strategy that we are trading is essentially we find the strongest stocks in the stock market, the leading sectors, and then we just take the leaders within those sectors and we find entries in them, right? And my favorite pattern, or the only pattern I really trade, is the bull flag, right? And it looks something like this: a leg up into a pullback into these moving averages, and then we kind of get this flag set up, right? This flag. And I could show you, plenty of different setups. This is a good one, known in this community, um, right? I mean, this is the way that stocks have moved. Really, any asset that has a buy and sell sort of like matrix to it, and that's what like runs the market. These are how these assets have moved over the past 100 plus years. Stocks will and have always moved the same. You could look back at any chart of a leader like Tesla, Apple, Google, Microsoft, back when they were, and even today they still do it, but back when they were, smaller cap stocks, and they were making these big moves while they were leading the markets. And, I challenge anyone, if you don't believe me, go look at the charts. I'll, if you don't believe me, call me out and I will make a whole video going over the charts. Because it's true. Stocks have always moved this way, and they will continue to move this way. That being said, um, our strategy is to find the new leaders, and it can be a little tricky, right? But that's why I start with my scanners. So what my scanners do is they find the top 1 to 2% of gaining stocks or gainers over the last couple of months, right? 1 to 6 months. And this basically puts us in the stocks, or gives us visual of the stocks that have made the largest moves over those time periods. And so those are leaders, right? Those stocks are leading the stock market. And it's then our job to go through it and find stocks that have, an ADR percentage of at least 5%. Why do we want an ADR percentage of at least 5%? Well, if I show you a stock like Boeing with an ADR percentage of 2.82%, you can see this stock just chops around. If I show you a stock like Bank of America with an ADR percentage of 2%, this stock has made a pretty okay move over the past 2 years, but it's only a 100% move over the past 2 years. And ultimately, it's very choppy, right? You're not seeing super, super clean moves. I'll say that stock actually doesn't look horrible, but it made a 100% move in 2 years. Let me show you the stock like the one we just looked at. I'm actually in this stock right now. This stock over the past year has made a 1,700% move. Let me show you the absolute leader of the market right now. SNDK over the past year has made a 5,000% move, right? And I mean, you can see I have it marked up already. Like, this stock has been making the exact setup I trade over and over again. So you find these leaders and they just give you more and more entries. It's how stocks move. They make a leg up, they pull back, right? Then they go sideways for a bit and get tighter and tighter in a range, just like this right here. Glitching around. They make a leg up, they pull back, and then they go sideways until they get tight here, and you get a leg up on high volume. And then the same pattern just repeats. A new leg up into a pullback. And now they all don't look exactly the same, but the concepts are there, right? higher lows off the moving averages, higher lows off the moving averages. No lower highs necessarily on this one, which isn't the cleanest setup, but it's still within a range, and within this range, you can see if I were to kind of extend this, this one's more of a sideways wedge, but at some point these are going to kind of intersect, right? It's compressing. That's not the greatest setup as an example, right? Like here's another good setup. You can see this one here. It's compressing, right? And these lines are terrible. But it's compressing while building these higher lows. And SMDK, see, ends up breaking down to the downside here, so that setup never panned out. But then here, right, compresses to a good move, leg up, and now we're doing the same thing over and over again. Show you another one. Let's see, what was another one? This one. Right? You can see this setup's not as clean as the other ones. But the concepts are there, right? Leg up, pull back into the moving averages, bouncing, making higher lows, tries to break out here, fails, right? And then ends up going sideways for a bit, and ultimately ends up breaking out. And all of these we're getting stopped out on, right? These are the losses. One thing about this strategy is the whole idea behind it is our stop losses are so tight and our risk to reward ratios are so high, right? If you saw the TikTok I just posted on one of my trades, I had a 1 to 50 plus RR on it, you know? So we can take 20 losses in a row and one winner will make up for all those losses. So the whole idea is to lose small and to win extremely big and to catch these runners and hold on to them for as long as possible, right? I remember I was in this one at 218 and I got stopped out on the same day. And a bunch of people I know bought it on the open the next day and they're up 30% and I just missed it. And it's an upsetting one. But this one move right here makes up for these two losses. And you're probably in profit after those two losses. Right, and I mean, here's another clean setup on it. But the whole idea is to lose small and win big. The average, my win rate on average is something like 30%, which is in trading terms or whatever, like, you know, you would think if you win 30% of the time, like, you suck. But if I win 30% of the time, but I win 50 more units than I lose, or than I lose when I lose, it's a profitable system, an extremely profitable system. So that's kind of the idea of the setup. Let me take a look here at my notes, see what else I'm missing here. I'll dive a bit into the entries, risk management, that sort of thing. So typically, I'll kind of give you an idea on this trade. I will only risk a maximum of 1% per trade when I'm taking my entries, right? So what that means, if I have a $100,000 trading account, I will risk $1,000 max per trade. I will usually risk anywhere from 1/4% to 0.5%. And if the market's getting hot, like it's been, or like on a stock like SNTK that's just proven itself over the last year and a half, like this setup, you can take 1% risk. You know, if this setup were to break out to the upside, you can take 1% risk. This one, you can take 1% risk. The next one, I'll probably take 1% risk because it's a market. It is the leading stock in the market right now. Like, this is the stock to be in. But no more than 1%. And I rely on my risk calculator down here to calculate all of the amount of shares I need to buy. And then I'll go back to ARM, so I'll show you how I enter on these stocks. So let's say we were to enter here on 520. You zoom out here. So, all right. Let's just get on the right day here. It's this one, right? Yeah. All right. So this right here would be my opening day of this candle here, right? So we had this pretty solid move up. On this day, I actually tried entering. Like I said, it got stopped out the same day. I was in at like 218 too. It was such a good entry. And the stock ended up going against me. I could show you right here, I think. Yeah, I was in on this. This is my 1 minute. No, that's not it. Something like this. Whatever. All right, let me just go back to what I was doing. I can't find it in this. I'm still learning this system. So, all right, we get our opening candle, and let's just say we were interested in buying this one. Here's our first 1 minute candle to form on the stock. The way I'd enter, I would let the first 1 minute candle form, and I'd just do nothing. Right? I watch the stock, and the only thing I'm looking at on this is how high price is going, and I'm really looking at it right here. I want to see what does the volume look like. And in the first 1 minute, it looks like so in the first 1 minute, you can see this skyscraper of a candle. If you look at all the other candlesticks, and if I zoom out here, oh, it's not showing me the other days. Well, if I zoom out, you can just see, and I'm sure the previous day looked like this too, because this stock's basically just been hot since this day. But compared to these days, this opening range volume is extremely high, right? You have a skyscraper. The other days are going to be more like in here at 9:30. And so you want to just see this volume look like a skyscraper, right, in a city. And obviously this candle here, it looks like a skyscraper, right? There's heavy volume coming into this stock. So I'm gonna let this 1 minute form. And once I'm like, okay, there's volume coming in, like I'm gonna buy this if it breaks this 1 minute opening range high, which is this high right here of this first 1 minute candle. And the moment it breaks it, I'm buying the stock, however many shares it says to buy. And I'm instantly putting my stop loss right here. That's my stop loss. And the risk calculator calculates all that. And then I just let this trade sit. And that's how I enter. And how I exit, I either get stopped out one, or let's say I entered on this trade and now I'm up 30%. Typically, I look for either the first 3 to 5 days, or if I hit before that time frame, at least a 1 to 5 risk reward ratio, I will sell 10% to a quarter of my shares, so 10 to 25% of my shares, and move my stop loss to break even. Or if 3 to 5 days hits and the stock made a little move, like not quite 1 to 5 RR, or it's kind of chopping around, I will do my best to move the stop to break even and get rid of a few shares if I'm in profit. If I'm not in profit, I might just cut the trade. If it's not looking good, we'll see. But that's kind of the rule: is 3 to 5 days, or 10 to 25%, or excuse me, or 1 to 5 RR. I cut 10 to 25% of my shares, and I move my stop loss to break even. There will be a video on that where I'll go completely in depth, more so on that, and I'll give more examples. But let me show some more examples of the strategy. I'm gonna find some. Let me look at, so this is the 1 to 50 RR trade I had a little while back. Okay, one thing I do want to touch on real quick is kind of the rules, right? The rules are, I need to see a stock be up at least 30% over the last month, right? I say at least 30% because we're looking for those leaders. These 1 free 6-month gaining scanners kind of take care of that for you, and all of these stocks really should be up at least 30% over the last month, unless the stock market is just doing really bad. Um, so at least 30% over the last couple of days. It needs to make that move, and then it needs to pull back towards the moving averages, just like you see here, right? Pull back and then surf them, right? See how it's kind of surfing this? Here, let me get rid of this line here. You see how it's surfing this 20-day simple moving average and building those higher lows every single day? And it's forming this range here, right? And as it's forming this range, it gets tighter and tighter and tighter. And then ultimately, what this means is at some point this stock's going to have to choose a direction. And we're just, like I said, we scanned for the biggest gaining stocks. So these stocks already have momentum to the upside. So there's a high probability they will continue to make that move. So we're just looking for this setup. And then once it gaps up to the upside, we take our entries, just like I said, just like I went over. A couple nuances to it. Let's say this stock, like you wouldn't have entered on this day, right? Even though it broke this previous day's high, which is kind of one of my rules. It's not a breakout if it doesn't break the previous day's high. But you wouldn't want to buy this here, even if it had high volume, because your stop loss is going to be so wide that the risk reward ratio really won't be there. And what I mean by that is you really don't want your stop loss, you don't want the spread between your stop loss and your entry price to be greater than this ADR percentage. Okay? If it is, your risk reward ratios will be messed up, and it's just kind of hurts the overall return on your money. Another thing that kind of plays into that is you want to see a stock kind of coil up like in here. Like if let's say this pulled back, right? Pulled back here and then coiled up near the top of its range. That's best case scenario. Best case scenario is it's going to coil up near the top of its range, and then the next day it either opens up way outside of it, something like BBAI, right? Kind of opens up outside of it because the previous date closed near its high, near the high of the range. Let me show you. You see how this day closed right here? It's near the top of this range, and the next day just gapped up overnight, right? And then you can just buy it on the opening range high. One that just did this was Dell, and I was in this, and I chose between AMD and Dell, and I was wrong, which kind of sucks. But had this range kind of here, and I didn't want to enter it on this day because it didn't have good volume. And then it gapped up the next day, and you can just see close up near the high of this range, and gaps up. Those are the easiest trades. And I think this was on NVIDIA's earnings, if I'm not mistaken. But you basically just want to see the stock close up near the high of its range on the day before the breakout. And then you want to see the day of the breakout break the previous day's high on high volume, enter on opening range highs on the 1 minute or 5 minute. But I think that kind of sums up the strategy. I mean, I'll run it back real quick. We are looking for the strongest stocks in the stock market, and we're waiting for them to set up and flag and then give us entries. And then we can enter and position ourselves correctly with low risk and high reward on the strongest moving stocks when we're in strong markets. Okay, one more thing I'll touch on too here. SPY and QQQ play a big part in this strategy. Right here, when we see these actually right here, when you see this 10 and 20 day cross like this, you see the purple line goes below the 20. That's officially a kind of choppy / downtrending market. I mean, you can see here the S&P was not making new highs prior to this happening. And once it crossed, we obviously have this strong leg down, right? And then I just wait. I just sit cash during this. So as I mentioned in the previous video, like I personally know people that are working for hedge funds, and I know during this down leg here, lot of them lost a significant amount of money. They were not making money during this time. The smartest traders were not trading during this time, and that was the best return on your investment during this time. And you're outperforming the S&P 500 during this time if you sit cash. So that's really what we're trying to do here. And then I wait for a time like right here, where the 10 gets above the 20, and then it gets back above the 200 and the 50. And then around this time here, once the moving averages get back in order, I'll start trading again and looking for setups. There really wasn't a whole lot through here because a lot of the stocks just went on these crazy runs with no setups. They just kind of they moon rocketed up. But it can show you who's going to lead, right? What stocks are following the market on this bounce and which ones are still lagging down here. But I think that kind of sums up the strategy. I'm going to get into a little more technical and a little more in-depth in the future, but ultimately we're just trying to find these strong stock sectors and the strong stock groups within these sectors and find the leaders and position ourselves accordingly within them. And it's not too simple. You can go on any chart and see this exact setup play out over the past 100+ years. This is how stocks move, and they will continue to move like this forever.